Hello traders and welcome to the educational video titled The Hammer. The Hammer is a Japanese candlestick reversal pattern identified at the end of the decline, at the end of a downtrend, at the end of a downward correction. Let's go through the specifications of the hammer. The hammer has a short, a small body of either color. It may be white or black. The color of the body is not important in our discussion. It has a small, tiny upper shadow and a long lower shadow. The long lower shadow it means that the bears, that the sellers took over the market, and we saw a sell-off during that long lower shadow. But then the market fell lower. The bulls, the buyers, found these low prices attractive and they entered the market with buy orders and they pulled the prices higher. And this fact has bullish implications, meaning that we expect that the next candlestick most probably will move even higher. Let's go on our price chart and identify the hammer. The hammer is located at the end of the downtrend, at the end of the decline, and I'm sure you identified correctly right here. Let's go through now and see our basic simple strategy. At the end of the decline, we identify a hammer. In this case, it has a white body. Again, the color of the body is not important. And then if we find this reversal pattern near a support area, then we feel more confident, enter the market with a buy order. And indeed, we can see a support area here. We place our buy order right above the high price of the hammer, and we place a protective stop loss right below the low price of the hammer. Take profit strategy is pretty straightforward in this case. It's at the 200% level. So we're going to close all of our position, all of our trade at the 200% level, meaning 1-to-1 risk to reward ratio. This means that the distance between the buy and the stop loss is equal to the distance between the buy and the 200% level. Of course, as we go on, we will add more parameters in our simple strategy. And let's go and do that. Before we do that, remember to like, comment, and subscribe below. Again, at the end of the decline, we identify the hammer. We place a buy order right above the high price and a protective stop loss just in case right below the low price of the candlestick. Now, the take profit strategy is modified as follows. We close part of our trade at the 200% level and then we close the remaining at the 300% level. Of course, traders, remember that you can modify this percentage to suit your trading profile. You can use any other percentage that you feel more comfortable. Let's modify once again our strategy. Again, at the end of the decline near the support area, we identify the hammer. We place a buy order right above and a protective stop loss right below the hammer. Now, we close part of our trade at the 200% level and another part of our trade, not everything, another part at the 300% level. And we allow the remaining of our trade to run even higher and take advantage of the rally, take advantage of the momentum. But in any case, we have to close the remaining of our trade when we identify any reversal pattern in the opposite direction. In our case, it's a long black body. So we are forced to close the remaining of our position. Now, before I let you go, let me show you a couple of potential setups just to keep in mind. In this case, instead of drawing a horizontal support line or a straight uptrend line, we use a dynamic trend line, that is a moving average. In this case, I use the simple moving average with 20 periods. You can use any other methodology that you like and any other periodicity. I'm sure that you're aware that you can use the 20, the 40, the 50, the 60, the 100, the 200, whatever suits your profile. Nevertheless, I use 20 and the simple moving average, and it's a rally. I'm sure you can see that very clearly. And I want you to notice that the hammer observed very good the moving average line. It touched the average line, the moving average, and it bounced up. And of course, you can open a position right above the hammer by placing a buy order there and place a protected stop loss right below it. And of course, the take profit strategy is up to you, but remember to close the remaining or the whole position when you identify any reversal pattern in the opposite direction. And I'm sure you agree with me that that was a pretty good trade, right? Excellent. Don't forget to subscribe, comment, and like right below. Subscribe. Thank you. See you in the next educational video.